The Conference Board's March consumer confidence reading coming in at 92.9, falling about 5 points month over month. February's reading had the largest monthly decline since 2021 as consumers weighed that tariff uncertainty in the first month of President Trump's term. Here with more on what the data shows us about the consumer, we've got Yelena Shulyatyeva. She's the Conference Board's senior U.S. economist. Yelena, great to have you on here. Talk to me about this number coming in just below the survey estimate, a sign of weakness in the consumer?
Yes, hi, good morning. So yes, definitely, we saw a significant decline. The index has fallen below the recent pretty narrow range it's been hovering around over the last several years. So we see that as a significant move down. That was also driven by expectations. So both present situation and expectations declined, but one of the most significant developments that we have seen was a decline in financial situation expectations from the consumers. So that seems to suggest that all this uncertainty around economic outlook is really starting to weigh on consumers' assessment of how they will fare going forward.
You also have median inflation expectations coming in at 5.1%, up from 4.7% the prior month. Inflation expectations so key to the Federal Reserve, so key to the health of our economy. Are you able to suss out how much of that is driven by tariff headlines?
Tariffs has been mentioned in the write-ins again in this survey, so definitely some of it is coming from tariffs. It could potentially be, prices of eggs, for example, and other food goods. But I think that our survey is also echoing a bunch of other surveys in that respect. And as you mentioned, it's definitely a significant indicator for the Fed. Now, they mentioned, and Chair Powell said that during the press conference, that the long-term inflation expectations remain anchored. If this situation continues and consumers continue to suggest that they are worried about inflation going forward, that could be, a self-fulfilling prophecy, so to say, and we may see inflation rising on those inflation expectations.
So, Yelena, it's Kenny Polcari. Thank you for joining us. Based on that conversation, if inflation is expected to go higher, then do you see the Fed at all in a position to be able to cut rates? Because in that scenario, I don't see it at all.
Our forecast is calling for significant, moderation in GDP growth based off all the uncertainty that we have seen so far. And I think we will continue to see a lot of uncertainty about economic outlook going forward. So in our forecast, we assume that all this uncertainty affects growth to a much larger extent than it affects inflation. And ultimately, by the end of the year, inflation subsides to some degree, given all this economic slowdown that we are expecting.
So given that analysis, then you expect that we potentially are going to have a situation where the economy enters a stagflation period?
Totally. This is I'm not going to call it a stagflation because, again, long-term inflation expectations remain anchored, and look at market expectations as well. But definitely this stagflation flavor is creating a significant dilemma for the Fed. But at the end of the day, our view is that, weak economic growth prevails and the Fed will have to cut rates, in the second half of the year, just given that the labor market may have to, weaken even further based on all this weakening in the overall economy.
And Yelena, the last time we spoke, you told me that weakness amongst the wealthiest consumers was a key metric to look at. Since we last spoke, we've seen a sell-off in markets, we've seen a market correction. To what extent does that concern you, that the sell-off we're seeing in markets could weigh on economic activity for that top percentage of earners that are really lifting consumer spending right now?
Totally. You mentioned in the beginning of the program that, we see some market reaction to that indicator, right? That was slightly below expectations, but it works the other way around as well. So we have seen in the survey, we have seen a significant impact on the stock market expectations as of late. on the consumer expectations, and that in turn may affect those intentions to purchase from the wealthier sector of the consumer universe.
All right, Yelena, thank you so much. We got to leave it there today. Really appreciate it.
My pleasure.